Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hey everyone, welcome to another episode of the Smart Property Investment Show. Unfortunately, I'm not Phil Tarrant. I'm Grace Ormsby, one of the journalists behind Smart Property Investment with you today. I'm in the studio with Mark Trowell, the CEO and founder of Yabonza, and we're talking all things proptech today. And I feel like it's a really good point. You know, it's March, we're in 2020, we're in a new decade. It's a really good point of the year to be talking about this, especially there's a lot going on.
Yes.
So welcome to the studio, Mark. Thanks so much for coming in.
Thank you.
Before we begin, I think there's a few people out there that probably still aren't quite sure what this proptech is about.
Yeah.
Before we go into anything else, can we just have a bit of a definition?
Yeah, not a problem. I can see where you're coming from. A lot of people kind of get afraid of the term proptech, but really property technology, as it longer term is around, using technology to empower business models. So it's not really taking over. What it's doing is it's enhancing what we have today and creating either further efficiency in what we do, but it's a blend between the two. It's using the technology that exists, generally exists in quite a lot of other industries, we've seen it, and really enhancing the work that we actually do. And that's how we use it, but you are really using those advances in technology to build upon that.
And it's basically just using technology in a way that benefits customers or consumers, isn't it?
Absolutely. It's applying that in a way that adds value to the consumer. The consumer, for example, and the consumer in our world is both tenant and landlord. How do we make great experiences for them using property technology? How can we create huge amounts of efficiency and therefore adding value to them in terms of their offerings? You've
talked about just tenants and landlords just then.
Yeah.
How does Yabonza fit into this space?
Yeah, so what we are is we are coming into the space as a property manager. We've looked at in terms of how the incumbent industry kind of worked and where there can be efficiencies applied to that. So we've taken, basically time and motion studies around, how a property manager operates, how a business operates, and we've broken down every one of those facets of the business. And we've gone, okay, where can we apply technology into that component that will drive the efficiency that allows us then to change the nature of the business model, allows us to build scale into it, and allows us to build efficiency into it that we can actually then pass those savings back onto the landlord. And there's various components, and really what it means is that the people that we're left with in the business are put onto higher value roles. We remove those lower value components and put them onto higher value roles where they're offering then a better service to the landlords and the tenants.
You mentioned the word incumbent, and I think that's really important for people to be thinking about. It does help, for me anyway, sort of explain it a little, like it makes it make more sense, basically.
Yes.
Are you replacing those, or are you just streamlining the whole process of property management?
We are replacing them. Our, competitors, are the incumbents in this world. But it's not really saying that we're out to replace them. What we're doing is we're actually being led by the consumer. So I think, you're now living in a world where we've seen it in lots of other industries and, everyone knows the classics with the Ubers and all that sort of stuff. But people and even banking in the earlier days, banking went from branch banking to doing it online, same with travel. So the consumer now, or the nature of the consumer is changing around how they want to interact with various services. So we're really just responding to that. And we're responding to it in a way that allows them then to interact with their property and with their, in our case, we have asset managers in our business, how we interact with their particular asset. And so we've kind of moved that industry on from where it was sitting for the last, circa 30, 40 years. I've been in the industry for about 27 years. I started out as a property manager and moving it on to really, okay, what's the next generation look like? If we can employ this technology into this world, what does it really need to look like now for the next generation going forward? So we do replace those incumbents, but really we're driven by consumer demand.
It is 2020. How long have you seen that technology piece really play into the way that property management occurs and sort of the property sector at large as well?
I think it's been a very slow uptake, especially in the property sector. I think it's driven by a number of things. It's driven by what I would say a very fragmented industry. The way that the industry really, does it have a need to change? If it doesn't feel like it's broken, do we need to change it? So I think there's been a long time coming in terms of this industry. As I said, I was in it 27 years ago. And really, from 27 years ago to now, there hasn't been a lot of advances. There hasn't been a fundamental shift in the business model that allows technology to come in there and really create that efficiency. When you've got sort of a lot of small scale operators, there's not a lot of movement in them. I also came from a background of real estate technology at Macquarie Bank, and we serviced quite a number of the real estate agents, and we created some great efficient products out there for them to use, but there just wasn't the scale for them to actually be able to leverage it. And therefore, it just didn't sort of get that traction. And now what we're seeing is the way that the consumer is coming in saying, well, we want that. Well, how do we get it? Right. And that's when you've got to look back and say, we have to change the business model. It's not just we can bring in technology and throw it in there and hope it's going to work. You fundamentally have to look at how the function of the business is running and then move that function of business on and then change the frame around what does the consumer want? First of all, why does the consumer buy a property? What are they looking for in that property? Right? And how do I respond to that? We look at property as an asset. So how do I then service that asset like you would with other asset classes? So it's really a hybrid or a blend between the two. And you're never going to get technology just being the be-all and end-all solution. Not yet, anyway.
Property has been, it's been bought and sold and leased since the beginning of time, basically.
Yes.
Uber now feels like it's been around since the beginning of time. Facebook feels like it's been around since the beginning of time. Do you sort of credit some other tech platforms, that may have come before as paving the way for it to then become a thing in the proptech sector and property at large?
Absolutely. Absolutely. I actually gave a presentation of this back at the ARPM conference last year. I was asked to come in and give the topic in front of 600 property managers around We Are the Disruptor. So it was an interesting room to present in front of. But I used exactly those examples, the ones that we just hit on before. I mean, we can go through a bunch of industries where they've almost operated in an independent or cottage industry way, and then you've had the likes of Uber come in, right? And banks we talked about before, right? But every single one of these ones has educated the consumer, has led the consumer on to saying, I want to be able to sit on a bus or a plane or somewhere and interact with what I want to do, and I want to do it 24/7. And so those industries, you're right, have really paved the way. It's changed the thought process around the consumer, how they interact with technology. They're a lot more comfortable with technology nowadays. They understand it and it's become a part of their life.
Mark, we're going to take a quick break, but just after that, I want to see how Yabonza is helping fix some of the inefficiencies that are occurring and what we're seeing in March 2020. Mark, just before the break, we were talking about how things like Uber and Facebook have paved the way to make it easier for you guys to come in and actually disrupt the property industry as a whole.
Yep.
What are the kinds of things that you're able to do to make the lives easier, the lives of landlords, tenants, consumers easier in the property space?
Yeah, so if you look at what a lot of those businesses have actually brought into it, there's some easy ones in there straight away, which is transparency. Right? Mm-hmm. We all love standing on the side of the road looking where our Uber's going and what street it's going down and seeing it go the wrong way and come back again. That's transparency and it's communication. So they're the first things, right? So we've got to look at it going, okay, technology allows us to communicate better. It allows us to provide further transparency. So we've built that into our systems and our processes and all that sort of stuff. So from a landlord or tenant's perspective, they can see whatever goes on. We don't hide. We don't hide behind anything. And it does keep us as a business to account as well, right? Here it all is. You can see where your property's up to. You've got repairs and maintenance. This is where it's up to. That's the first level of it, transparency. And transparency creates a certain level of trust as well. You're highly transparent, you're highly communicative, you're going to get a higher level of trust. So that's just the first area. Then we look at all the functions that are actually within the job as well. And we look at it and go, okay, you've got things around repairs and maintenance, you've got leasing, you've got everything. All of those areas have the ability to actually bring technology into it where you can make them more efficient. We actually look at, for example, the way we look at repairs and maintenance. We had a stat from our business last October where 50% of the repairs and maintenance that were actually raised through our business, throughout the data we had, we were able to solve those problems with a tenant without the need of a trade coming in.
Okay, wow.
So you look at then bring that back to tenant experience, the tenant feels empowered. They feel like someone's actually doing something. So they go, okay, the problem's resolved. I'm not waiting 24, 48 hours for someone to come around. It also empowers them because you're then educating them on flicking a light switch or whatever it may be, or cleaning a filter, etc. and they feel empowered that I know if something goes wrong like that in the future, I know what I have to do. And then from a landlord's perspective, that saved them, that expense against their property, and they can see that how they got resolved. And we can almost take that across almost every single facet of the actual management life cycle. And other key areas is around, obviously, payments. Payments is huge. Everyone talks about proptech, where if you look at property management, it's as much fintech as it is proptech, with the movement of capital going through there with, payment of bills, with payment of rent, with, payments out to the landlord. So we've put a lot of effort into how can we make that more efficient, but how can we make it a better experience? For example, in Yabonza, we own our own payment gateway. So we're able to facilitate payments for tenants. We can aggregate payments for tenants. We can split payments for tenants. They can pay multiple bills. And then we can pass that cash straight through to the landlord side. And for us, we don't receive or hold funds. So therefore, it doesn't need to go through a trust account. It's one movement all the way through, where then we will pay any sort of out or any approved invoices with net funds going down to the landlord's account. So again, that's sped up the processing time. Landlords actually sitting on their own money versus us sitting on it in a trust account where it's not earning them interest or offsetting on there.
Of course.
So there's many things in that life cycle where you can see it's really starting to take off.
Because you're talking about it as if it's a life cycle, but it still sounds more proactive than that.
It is extremely proactive. And that's probably the biggest thing that proptech allows us to be, is become proactive. We can start almost to see things happen before they happen. We collect a lot of data, and we look at that data, we analyze that data, and then it's not from one day to the next around doing the same thing. It's with this data, what's it telling us? How can we become better the next day? How can we look at that data and what is that data actually telling us? What trends are in that data? And with that data, we can go, okay, we can build a product around that, or we can make a slight tweak to the infrastructure that again gets more efficiency and gets a better outcome for that landlord's asset, or gets a better outcome for that tenant. Because if you give a good tenant experience, everyone knows the tenant likes the property they're living in, and then it's better for the landlord. And I think especially with the likes of build to rent coming into the market, if you look at build to rent, that's all around tenant experience. It's all around how are we giving a great tenant experience. So if you're out there as a landlord and you've got your property, how are you going to compete against a build to rent that might be being built down the road? How can you create that great experience? And that's what we focus on there as well.
It sounds like you've got a lot of predictions and forecasts in there. We might come back to them later, but before we do, I just want to ask, we've talked a lot now about the benefits that there are in proptech.
Yes.
Can you see any negatives?
I suppose there's always going to be a negative. We're very quite optimistic in terms of where it's going. I can't see a lot of downsides, because where people may look at it and say, okay, but you're taking away the individual, you're taking away the relationship. We looked at that and went, there is a need for the relationship. And so we really reframed the individual in our business. So we moved property managers on to what we call property asset managers, who have that genuine relationship with the landlord on that one-on-one across their portfolio and wherever it sits. So I think where people may feel there could be a downside is in potentially that relationship that exists today. But we looked at trying to solve that in terms of, how we bring that relationship in. There will be a downside at some point, but every downside has a solution. So it's around how that solution's going to kick on.
Sounds great. We'll take another quick break and be back very soon. Mark, we were talking just before the break about some of the things that you're sort of predicting coming in now that I'm assuming you've got plenty of data now behind you about what goes on in the life cycle of property management.
Yep.
What are you seeing now, and what are you sort of expecting, I guess, 1 year down the track? We're in the midst of a bit of a coronavirus saga at the moment, and no one really knows what's going on with that.
Yeah.
Does that worry you? Do you see anything, long-term, any issues with that?
I think, if you look at just the environment that we're in now, property as an asset class is quite stable. It's a longer term view. It's not, you don't buy property for a year or two. So you've always got to take that longer term vision. I guess what you've got to look at is, how are yields impacted on property over that particular time? What is going to be the economic impact to, potentially your tenants? Property is quite recession proof. When I talk about recession proof, I'm looking at investment property. If you've got somewhere in there and it's in a decent area, it's generally rented out quite well.
And we are seeing people at the moment that are in a position that everything's fine.
Correct. That's right. And if you look at it, someone always needs somewhere to live. right? And the population's going up. So those people need somewhere else to live. So it is quite stable in that respect. But I guess what we've seen a little bit of is that, you know, that balance between kind of short-term and long-term rental. We have a separate business that helps support some of the people in that kind of that short-term space. And I think that's probably the area that we've probably seen the most impact is, you know, with the likes of the coronavirus coming in with the fires, you know, the kind of that supply-demand aspect to it. And then people potentially shifting back to a little bit towards that longer-term rentals, that stability around that longer-term market. I think that's probably going to be probably the focus over the kind of next year in terms of the thinking behind some of the investors. You know, what if another coronavirus comes along? What if something else comes along? What's, you know, demand versus supply going to come? What's my upside versus my downside? So I think that's going to probably take probably the next year to work its way through, and just people think about how that's going to impact the longer term.
I guess as well, it is a bit tricky to reconcile, you know, coronavirus. We're all being told self-isolation is a thing. But then technology doesn't really need that face-to-face interaction either.
Absolutely.
So it's future-proof in that sense, for sure. It
is future-proof in that sense, and providing we can all work from home and still produce an income, I think my prediction, and this is just my personal prediction, over that would be, you know, the areas that you're investing in properties. And if you do get those sort of lockdowns that, you know, we've seen in places like Italy, what is going to be the impact on those local economies? And how can those local economies exist today if they're very heavily dependent on import-export businesses, if they're very heavily dependent on people actually moving around? What does that mean for the person in the job? And that may be a tenant of yours. And if that's a tenant of yours, then what does that mean in terms of them being able to service the rental income on that property? So I think that's probably one to watch closely.
So you're not really expecting too much of a detriment to property investors. It's easy for us to say standing here in our studio in North Sydney, isn't it?
Buy for the long term.
But yeah, exactly. And then so 5 years down the track, you know, what are you expecting proptech to be doing?
I think I see proptech a lot deeper into this space. I think it really will sort of shape the industry in a different way. We talked about incumbents before. I think proptech will enable businesses to really look at what they are. Am I a sales business or am I a rentals business? And really start deciding where you want to sit. And then I can see those businesses kind of starting to separate. I mean, most of the time they've been, you know, they're a sales and rental business, but they're very different processes. They're very different businesses. And I can see then more specialists coming into the property management space, servicing property in a different way using property technology. And I can see potentially sales then taking shape in terms of leveraging the technology and agents almost becoming their own brand, supported by the existing brands out there as well, running their back offices using a lot of technology. So I think there'll be a shift in the business models there.
We were talking about that a little bit before the show, and it doesn't really even sound like when you do say that there's going to be this big split between property management and then the real estate side of things. It still sounds like it's really positive for, you know, every person in the current transaction.
I think it is. I actually think it will put property management, I think it will give it more of a value that it's really worth. I mean, a lot of the time it is seen as a little bit of a poorer cousin to the sales side of the business, but I think it'll put it really more in the spotlight. And because of it, it would become, you know, it's not that it's not professional, I don't want to say it's not, but I think it would put more of a focus on it as a really good profession. And then it will really start allowing us to become efficient in that area and offering a better client experience, because at the end of the day, that's what we really look at. What do we work for? We work for a client, and we've got to offer them that experience, and we've got to offer them, you know, we're managing their asset, and how do we then get higher trust with them to then be able to manage their asset, get the better returns and all that sort of stuff. And I think that's what proptech will really enable us to do, is focus on what we being put in place by the client to actually achieve for them.
And keeping that sort of 5-year forecasting thing in our heads, is there anything, Mark, that you're seeing that, you know, there are opportunities that haven't yet been realised, or ways that, you know, proptech will just become a game changer in the space in that time?
I do see quite a few, but that would actually be a lot of them would actually be giving away our product backlog, which we can't release too much about that. But I would say in terms of 5 years, I think it's going to be very different than what we're actually seeing now. I think there will be fewer players in the market offering better services, and it will be more encompassing. It'll be more of a one-stop shop around the home. And that's where I certainly see it it going into the future. And you're probably right. It's about a 5-year cycle from where we are around now. I think the home is almost one of those areas that people see value. And you've probably seen it through Google, Amazon, all those companies, Alibaba. Alibaba's got about 1,600 developers in the room over in China developing around proptech. They understand the value of the home and the value of the services they can offer to people in the home. And I think that's really what it's going to become, is just an all-encompassing component around the experience for both tenants and landlords.
So I guess a big takeaway from this then is watch this space.
Absolutely.
Mark, thank you so much for coming into the studio today. It's been a great chat.
No worries. Good to be here.
Any questions or comments, or to be a guest, please get in touch with us at editor@smartpropertyinvestment.com.au. Thank you so much for listening in. You can also send us an audio message if you're listening on the Smart Property Investment website. Scroll down and hit that record button and send us an audio message, and we'll try and play it on a future show and get you heard. As always, if you like this episode, make sure to like, comment, subscribe on whatever platform you're listening on. Thanks for listening.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.